Hello, everyone, and welcome to the Wall Street Blockchain Alliance's policy update. Today is July 2nd, 2024. Ron Quaranta here, chair of the WSBA, with my good friend and the subject matter expert over at S&P Global, our WSBA member firm, Mr. Adam Goldberg. Adam, how are you, buddy?
A little worse for wear after the U.S. last night, but trying to recover.
There's
It
like
might take the men's national team a few more years to recover. We'll see.
There's so much to cover, and I think since our last policy update, we can go on for pages. I do want to do a brief shout out. Shout out to Dina Ellis, who couldn't join us today. She's a little bit under the weather. Hoping she gets well really quickly. And for those of you joining us on LinkedIn or X, please do post your comments or questions to Adam or myself in the chat. We'll address them as quickly as we can. And our usual disclaimers, Adam, obviously, nothing we're talking about is accounting, investment, legal, or tax advice. And then the things you and I are discussing here are really our opinions, don't necessarily represent the opinions of our firms. Adam, it's been a really busy, I want to call it a busy couple of days, let alone a couple of weeks or a month or so. Let's start with some of the regulatory and lawsuit stuff that you and I have seen. You know, it's kind of a slow week this week, but in the past 2 or 3 days, we've seen a lot come out. So recently, Coinbase sued the SEC. And the SEC, to be clear, is already suing Coinbase. Tell us a little bit about the suit from Coinbase. What were your thoughts about it when you saw it, and how do you think these suits against the regulators are helping? There are others we'll address, but I'd love your perspectives when you saw the announcement.
Well, I think the biggest thing is that I think people like Coinbase that have aggressive legal teams and have a lot of experienced lawyers working for them, try all different avenues to potentially get information or potentially help. One of the main avenues they're trying to go after Coinbase, it seems, in this litigation is using the Freedom of Information Act,
Yeah.
trying to get as much information from the SEC as to around their decision-making process, as to the way they talk about Ethereum. And obviously, this has been kind of a long-running commentary in the different cases the SEC had. For example, a huge piece of the Ripple litigation that was going on for years around XRP was around one of the former directors at the SEC, his statements on Bitcoin and Ethereum, and basically whether or not they pointed to those as being securities potentially. So that this seems to be another way Coinbase is trying to go after it, trying to get additional information through this suit that potentially could help them in their other suits, trying to get more understanding of the SEC's decision making. Is it arbitrary and capricious? Was it well founded? They're really pointing to the different inconsistencies in the SEC's approach, be it some cases, the way some public officials speak, different things like that.
Adam, you know, it's really interesting as you bring up this topic, and you and I and so many in the audience have seen these, you know, FOIA requests for information. You know, is there credence to this idea that some regulatory agencies or governmental bodies will kind of slow walk FOIA requests, or is it just simply so burdensome? Right, the SEC, all deference to the SEC, they're not just focused on crypto cases; they've got a lot of stuff going on. But in your experience, FOIA requests, are they rapidly answered, or how does that work?
I mean, so it really depends. I mean, most federal agencies have what's called a FOIA officer, which is and really the way FOIA is designed to work is it's supposed to be like first one in, first one out. So you really aren't supposed to get priority in your FOIA request if there's previous FOIA requests of the agency that are previously there. And then the agency isn't under an obligation to respond in a reasonable period of time. And that's basically considered mostly by judges the time it would take a reasonable person to query the material, how much material is at issue, how much time will it take to review the material, does it have to be redacted? You see this a lot with the State Department because they may have to redact sources and methods. We saw this with the Hillary Clinton classified email investigation where there was tons of different FOIA requests. And the way you really usually see these move forward is if, again, agencies can take a very long time, again, if it's not a high priority request. With some of these more notable requests, usually what will happen is the action will be filed and then they will go to a judge to seek the judge to compel the agency to produce the documents on a certain schedule. And that's really when you see the agency starting to move their feet, is if they get pressure from a judge. The judge will say, in my view, this is taking way too long. You at least need to start batching out the material. So produce 1/3 of the material by this date, 1 month from now. I'll give you 2 or 3 more months for the additional material. I'll give you another 3 months for the final tranche. But I think you saw that with a lot with like Hillary Clinton's emails,
Sure.
where you had people suing the State Department to them, and then the State Department did a rolling production where they would release a certain amount of emails they had reviewed and for free. judge would say, okay, this is good. Next month is going to be a different release, and that's typically the way these things go.
Yeah, Adam, and it's so interesting. Now, as you explain that, it's such an odd world we sort of operate in. And for context to the audience, the SEC is already suing Coinbase for operating as an unregistered securities exchange. And there's often this kind of tit for tat feel to some of this. Adam, did you see it that way when you saw the news of this? And I feel like the industry for a long time got sued by the SEC and settled, right? But now we're seeing these kind of deeper pocket players in the space that are working really hard. Is that a legal strategy, or is it? What do you see that based on?
Well, again, I mean, the reason you see most people settle because most people typically would want a friendlier relationship with their regulator
Sure.
if they can have it. Where you see an interesting example is with someone like Coinbase, which obviously they do a lot of things on the traditional security side in some areas,
Yeah.
but they basically, in their view, they don't think the SEC should be regulating them, or at least a large majority of the activity that they conduct. They don't think that these are securities. They don't think the oversight is appropriate. They don't especially think the charges around the lending program and some of the other things that
Right.
they have done are proper. So when you've kind of chosen to have an I'm sorry, antagonistic relationship with your regulator, then
Mhm.
you might look for different avenues such as this where can I needle them in some way? Can I potentially find some embarrassing material? Because obviously these are agencies, they do get embarrassed if
Sure.
there are public facing documents that come out. I mean, I think you even saw that again with the Ripple XRP litigation where you were able to get some of this testimony from inside the SEC. You were able to get some of the notes around some of the main speech that went into saying that Ethereum is potentially not a security. You got to see some of the thinking that went around that, the meetings the directors were having. So it could be potentially embarrassing, but also could be potentially useful for them in their future litigation. One thing also to note that they highlight in the suit is that they have been making these requests now for some time and they're not getting
Right.
honored. And that's usually at the point then you would go seek court action.
Right. And it's interesting, Coinbase is one of those cases and entities where they've got a lot of resources. They're a really large organization. But it is interesting to me, Adam, because this tells me about the expanse of the federal government. And one of the things colleagues called me up and asked me about was, oh, I see Coinbase is suing the SEC. The SEC has been suing Coinbase. And I think it's the Marshals Service is using Coinbase to custody tokens or to help them offload tokens.
Yeah, and I
And,
think you've also seen the presidential campaigns are starting to accept them on both sides, even though
yep.
the Biden campaign,
Yeah.
and I think the IRS is making some availability if you want to pay your taxes in
Right.
Bitcoin and some big stuff, things like that. So yes, it's the consistency across the government is not always as much as we would like, for example.
Indeed. And Adam, the other interesting part of this, it wasn't just the SEC that Coinbase sued. Uh,
FDIC as well.
they sued the Federal Deposit Insurance Corporation, FDIC, and the argument there, and I think they're working with another organization, forgive me, I forgot the name of the organization, is that the FDIC was, and I'm going to just use the phrase, Adam, working to debank or unbank crypto businesses writ large. And when I read the suit, and the details around their suit against the SEC and FDIC, I almost looked at the SEC portion of it and said, it'll probably be easier for them to get FOIA request information through a court, through court action, than it would be to prove that the FDIC is debanking crypto companies. Is
Yeah,
is that a harder lift?
I do think so because the FDIC is not under any obligation to certify a bank. Obviously, you have to meet a various different criteria, and also the FDIC does work with its other banking organizations, such as the OCC, the Office of Comptroller of Currency, which regulates the larger banks in the country. And the OCC has given guidance where you need to do pre-clearance before doing any crypto or digital assets activities. The Fed, which is obviously a huge regulator in the space as well, has denied different applications to banking companies, citing the risks, lack of controls, lack of KYC, AML, all different variety of reasons. That so basically that argument really falls in the bucket of, let's say, an arbitrary and capricious action,
Hmm.
which is we're just making a uniform statement that we're going to deny anything no matter what, no matter if you meet all the other criteria that another similar bank meant, just that you do crypto digital assets, we don't like you, so we're going to deny it.
Hmm.
I think the agencies would argue that they take a little bit more nuanced approach, and that one of the reasons they're not giving a federal deposit insurance charter is because, let's say, they don't want to be on the hook for crypto deposits if, let's say, there is some kind of hack or there's some kind of depreciation in these assets. Obviously, some of them could be quite volatile.
Yeah.
Less so in the top currencies, let's say in Bitcoin and Ethereum, the top cryptos these days. But still, I mean, if you're a crypto banking institution, you could see a wide range of variability in your capital structure. And we have seen some crypto banks collapse, for
Yeah.
example. So you saw Silvergate and some of the other people collapse. So, and Signature Bank. So
Yeah.
so some of the bigger banks in the space that were in crypto, SVB, Signature, those have collapsed. So you would understand, as a banking regulator, looking at these bank failures in this specific industry might make you a little less willing to approve new ones.
I want to. Thank you for that. There's a couple of points I want to weigh in on there, and I know it becomes very easy for us to say crypto banks, and I've read crypto bank in the news, but to be clear for the audience, when we look at Signature, and I think the SEC just charged, was it Silvergate or Signature, one of them, for AML violations and misrepresentations, both
Yeah, it was Silvergate. I believe they
Silvergate,
settled with the SEC. So it was
and I
basically, it
think
was one of those charge, settlement, pay, fine things.
yeah, and I think they charged and settled within less than 24 hours.
Yeah.
But to be clear for the audience, Silvergate, Signature, they weren't pure crypto banks. They
No,
just
no, they were traditional banks. I mean,
right,
actually my former boss, Barney Frank, sat on the board of Signature Bank.
right,
So
right.
so definitely they weren't specifically solely in crypto, but that was
Mhm.
a part of their business. It was a market that they targeted. It
Mhm.
was something they went out to their investors and to the public and said, "We are a crypto friendly bank. We're
Sure,
trying to expand into this asset class." So I mean, it really comes down to, typically where we've seen most of these institutions set up and structured is in states that have robust regulatory frameworks
yep,
for these kind of things. So I'm thinking on the much more lenient side, let's say the Wyomings of the world.
right,
They give a lot of structures for crypto banks and crypto trust companies that want to set up in Wyoming. New York obviously has a much more onerous structure, much more robust
sure.
regulatory regime, but you have seen a lot of New York trust companies. Most of the biggest crypto companies that we talk about that operate in the United States are typically licensed in New York. Many of them are special purpose trust companies and other things like that. In New York, they have that special trust charter that you can only get. A bunch of them have bit licenses.
Mhm.
So in this way, the feds are really taking the key from the states as to where they approve. And I think till you get more clarity on the national regulatory framework for crypto and digital assets, it's going to be harder to get one of those FDIC charters or get an account at the Fed. I know there was a huge controversy because a big crypto institution went through years of trying to get a Fed charter so they could access the Fed window, and they were not able to and were denied at the end of the day.
That's
So
right.
it's still tough out there without a regulatory structure that's clear.
Adam, you read my mind because it brings us right back to a comment and a point I wanted to make. You brought up one of the large institutions that applied for that federal charter, and I think you alluded to this earlier. And I want to make it clear for the audience, the Federal Reserve, even if you as an organization comply with all of the requirements to get a federal charter and be part of the Fed and connect to the Fed system, they are not required to approve you, correct?
I mean, the one thing they are required to do is, and that's probably going to dovetail into another topic that we're going to go into around Chevron, but
Mhm.
they're required to comply with the Administrative Procedures Act. They're required to comply with the APA and administrative law. And
Yep.
administrative law states that you don't treat anybody in an arbitrary and capricious manner. So basically, you have a reasoned decision for treating everyone the same. And as we saw in kind of the ETP approvals for the Bitcoin ETFs and ETPs, you have to treat like as like. So if you're going to approve a Bitcoin futures ETF, then there's no reason you can't approve a Bitcoin spot ETF if they have all the same parameters, all the same safeguards, all the same risks, all the same controls. I think what the regulators would likely tell you in relation to these banks seeking FDIC charters is they don't present themselves as normal banks. They have
Mm.
different risk profiles than as traditional savings and loan. They probably need to hold additional more capital requirements than they otherwise would for traditional assets. They probably have to have more robust KYC AML controls than they currently have in place. So that's the thing any court would look at is the agency operating in a manner that is reasonable, that is sensible, that follows the Administrative Procedures Act, follows their governing statutes. Have they created reason logic for their denial? If they're just
Mhm.
denying out of hand, then that's when then you can go to court and say this action was arbitrary and capricious, and likely the court would throw it out.
Right. Adam, thanks so much for everyone in the audience. Again, thank you so much for joining us. I know we're running into a bit of a slow week with the July 4th holiday coming up. And if you've got questions for Adam or myself, please put them in the chat. Adam, I want to address one more case, SEC v. Consensus. They charged Consensus recently, both for the MetaMask wallet and staking, as I recall. And if I recall correctly, Consensus is already, again, suing the regulator. But when I read the charges, the regulator's perspective on wallets and staking seems to be relatively consistent. They need to be registered, pardon me, and their argument is Consensus didn't do that. Did you agree with that assessment? And how did you review the charges from the SEC?
Well, it seems it's continued the theme of the SEC. So basically, this is one area they've particularly targeted. It's the same thing and discussed in the Coinbase litigation we discussed. They've
Yep.
gone after Gemini and a couple and other partners for these staking programs. And one of the reasons are these really do have kind of some of the worst aspects of the traditional, not I wouldn't say frauds, but
Yeah.
traditional red flags that raise in securities world, right?
Mm-hmm.
We're promising you a yield that doesn't seem reasonable.
Yep.
So if you're getting a yield on a treasury bill that's 5% and we're promising you 15% for staking your ETH, how are we getting that 10%? Are you clear with your investors that are investing in this product exactly how you get from A to B? And that's where they've always really said, at least they believe they have the strongest case that these are securities, these staking programs. And it seems in the MetaMask wallet, it was, as you said, they weren't registered and they were part of this overall staking scheme where they were promising a return from the staking that they were not exactly clear how you get that return. And obviously, we have seen many different crypto platforms potentially, I wouldn't say lie to their investors, but be misleading and basically guaranteeing the return. Sometimes they weren't able to. I think we saw that again. I mentioned Gemini with their earn product. They promised this certain yield, and then basically that program collapsed, and then people's ETH, their different assets were locked up. They didn't get the yield, they didn't get the safeguards they
Right.
believed they have, because people, when they think about it, they think of it almost as a risk-free exercise, like parking your money at a bank.
Yeah.
You should have access to it anytime you want, obviously, if you agree to lock it up for a certain point, but you're thinking about it as like a CD, right? I take my $500, I buy a certificate of deposit, it locks it up at the bank for 6 months, I get back, let's say $525 if I'm getting a 5% interest rate on that
Right.
CD. That's the way people view staking,
Yeah.
but that's not exactly how it works because these are not naturally yield bearing instruments. So how are you getting that yield? Are you doing financial engineering? Are you lending
Mm-hmm.
it out the front door and doing, and that is where a lot of these companies run into difficulty, is they don't really explain how they get from point A to point B.
It's interesting, Adam, and I don't. Neither of us as litigators are litigators, but I wonder how much of this conversation, and this might be too deep of a dive for the time that we have, become conversations around things like disclosures and terms and conditions. And comparatively speaking, did firms like this believe they disclosed enough? And the burden of proof on a regulator is they knew they weren't disclosing enough. They were misrepresenting. They should have been registered securities, and they knew. Is that an overreach in my logic?
I don't think it's an overreach. I mean, I think you really got to know what the regulator you're dealing with, and
Yeah.
obviously the SEC is a disclosure-based regulator,
Mm-hmm.
so they always view more disclosure as better,
Yeah.
more information for investors is better, and that's honestly been their key argument as to why they believe many of these products are securities,
Yeah.
and why them being sold in what they would say is an unregistered fashion is so problematic, because what they view is the registration process for registering a security does give the investor some comfort, right? Because you don't just file an S1. You file an S1 and it has to be approved by the SEC. There's a back and forth. They
Right.
go through the filing, they look at the assumptions you're making, they look at the price, they see if it's reasonable or not. They look at your share structure and your allocations and whether or not you're going to liquidate the stock. I think we saw that with DJT Media, Dump Truck
Yep.
Media, where it's gone up and down. But one of the reasons you see the stock be somewhat volatile is they have to publicly file. So they file their quarterly statements with the SEC when they want to do an additional share distribution, let's say to Trump, to get additional shares once he's met certain price metrics.
Mm-hmm.
They have to disclose that. You saw that with Elon Musk and the shareholder litigation around Tesla. They want to
Yeah.
give him this large package. They have to disclose the ins and outs of that. And that kind of disclosure, I wouldn't say has not been really the standard or the norm in the crypto and digital asset industry. There definitely are disclosures. A lot of these are former banking people. There are good lawyers working on
Sure,
these,
sure,
but because they're not one of the main, I guess, push and pull, right? Is
yeah,
you wanna disclose, but you don't want to disclose in a manner that stating that it's a security if you don't think it's a
yeah,
security. So you don't give all the disclosures that you would give for a security
right.
because you don't believe it's a security. So you don't believe that you should give those. And then the SEC is the position, it's a security. Give me the disclosures I'm expecting to be a security. And even if, let's say, we disagree on that question, if you have the disclosures, then maybe you're going to be safe and not be charged. But if you don't, then you go to court.
It's a it's a difficult calculus, I imagine, for a lot of these participants in these firms because it really comes down to how close to that line do you want to get, right? And we're not talking about those who are happy to commit fraud. We're not talking about the illicit actors. We're talking about the firms that are trying to build something, but are encountering the challenges maybe they should have known better about. Adam, I appreciate the time. I want to pivot to something else. I never thought you and I would live in a world where we're both at our desktops or laptops and constantly hitting refresh at the U.S. Supreme Court.gov website to
So
see.
been a busy end of the
It's
term.
been a busy end of the term, and there's a lot of difficult decisions there, and there's a lot of open public debate, and a lot of people angry or happy on both sides. And we won't talk about immunity cases and others. They're certainly worth time, and I think over a happy hour, you and I can have that conversation over some cocktails. I do want to talk about something that I believe impacts our segment of the world. The overturn of Chevron and kind of the other Supreme Court decisions that are relevant there, even going back a few days. But let's start with Chevron, which is a 40-year-old decision. I want to say 84. I think literally, Adam, correct me if I'm wrong. Which,
Yeah, written by Scalia.
yeah, right. And the premise there was that the federal government delegates authority, or kind of the experts at regulators get wide swath and capabilities to make some decisions. And the Supreme Court came down and basically said no, that is no longer applicable. And when I looked at the history of it, Adam, it was really interesting to me. It's often raised as a conservative versus liberal conversation, and we understand the context of that. But if you look at the original Chevron case, it was a conservative court at a conservative administration that wanted the regulators to have that greater deference and scope of capability. And now it is arguably a more conservative court opinion that is taking that away from regulators. Why is that? And what was your reaction when you read that decision?
Yeah, so basically, the main thing to know is that Chevron, basically what it's referred to as Chevron deference. Basically, regulators get deference to reasonably interpret the statutes that they have. And one of the reasons Scalia is thinking there is the regulators are the experts. They're typically nonpartisan. Many of them are not political officials. They're not political appointees. These are career bureaucrats, civil servants. And for example, let's say the FDA, for example, in a case previous to that, they essentially kept mifepristone on the market. And one of the reasons there is the FDA went through a reasoned process to determine that that medication was safe. And the thinking was judges are not experts on medication. They're not
Mhm.
experts on weather rules at NOAA. They're not they may be experts on securities law when it comes to the SEC and other stuff, but for the ins and outs of environmental regulation and how air pollution works and how water pollution works and how contaminants work, especially in these science and technical areas,
Sure.
they're not seen as the experts. So the thinking was we want to empower the agency experts to pass rules that, again, they believe are firmly authorized by statute. Because if you don't think that the rule is firmly authorized by statute, many rules have been thrown out for there. So I think you saw the Clean Power Plan,
Yep.
both under Obama and President Biden, both partially get gutted because they said that the Clean Air Act did not cover that, did not
Right.
cover these, even though it makes, even though it's a reasonable interpretation to think, okay, we want clean air, Congress has authorized the agency, the EPA, to do things. Well, but they didn't authorize them to specifically regulate this kind of admission, not at the point of source, which is kind of what the reason they were thrown out.
Yeah.
So there was still that avenue attack for regulators. Basically, you didn't interpret the statute correctly.
Mhm.
Basically, what this new decision did, and you said my reaction, I would say I wasn't surprised because this is largely come, but I wouldn't say gobsmacking, but it has been interesting to see that every term this court does seem to take a 40, 50, 60-year-old precedent or a
Mm,
century-old precedent and say, we just think that was wrongly decided and we're going to take it away.
yeah,
That's not really how the court has operated most of our lifetime. Most of our
yeah,
lifetime, stare decisis was very important. They
sure.
gave deference to previous cases. They did not seek out cases just that they thought were wrongly decided, try to rehear them at the court. I think we see that a lot more with this court in particular. And one thing that's really going to be interesting going forward is their basic mandate to the agencies was, this is not our problem, go back to Congress. You want to write this rule? Ask
Yeah.
Congress to be prescriptive and write the rule. The problem there is, as we know, Congress is not quite functional these days. So
And for some
putting
time.
for some time, so
Yeah.
putting more onus back on Congress to robustly authorize these is going to be difficult. But I think even the court, in doing this,
Mhm.
seems somewhat concerned about the massive impact it could potentially have, because
Yeah.
Roberts wrote in his decision, we don't believe that this opens up every previous case that was decided based on Chevron
Yeah.
to a new challenge now that Chevron's gone.
Right. It's funny, Adam, and thank you for that as you explain it. It's like I feel like every generation, no matter their part of the political spectrum, looks at the existing Supreme Court and says it's an extreme activist Supreme Court, and you just see these kind of waves of opinion generation after generation. But there is a certain degree of activism to the court's actions. But I do want to push back with you on something, and I see this in the media a lot in the reporting of it. And certainly, you alluded to this, where the regulators are seen as, or have been seen by the courts and by the Congress as the experts in this space. Let me push back on you about that for a little bit, and with as much respect as I should bring forward, the chair of the SEC is not a technology expert. The chair of the
Well,
FT,
he did teach a class at MIT, so I
uh,
just want to be careful
and you and I
there.
get it. Fair enough. Fair enough. The chair of the FTC does not have a long history in antitrust law. And so I think part of the philosophic argument is, yes, the career bureaucrats who are potentially looking to really serve the public and have been doing so for many, many years still report to people who are political appointees. Is that an overreach in your opinion?
No, I mean,
Do you think I'm focusing
honestly,
on it wrong?
no, I don't think you are, because that's really how we got here. So I think
Right.
we can't forget. So basically, look back 40 years, Scalia passes Chevron, as you said, conservative court, Republican administration. One of the reasons Chevron was important is it basically gave powers to OIRA, which was this agency created inside the White House to review federal rules en masse, to see if they had cost benefit analysis and
Yeah.
to see if they were good for the economy. Chevron basically allowed OIRA to do its work. Without Chevron, because there was no authorizing statute for OIRA to do that, it was a new idea at the time. But one thing we've seen is, and one of the reasons it went from a tool used by conservatives to get rid of regulations they didn't like or put forward their point of view, to something that conservative courts were really looking to take down, is basically the rise of the administrative state. Because Congress has been so dysfunctional, the pattern, and I saw this with some of my bosses through Dodd-Frank,
Yeah.
is the now standard post Chevron, or at least had become in the late 1990s, early 2000s, and going forward, is Congress says, I want to do something, and then they leave the hard work to the regulator because they don't
Right.
want to actually take the tough vote and actually do the work to write the rules. Because doing that, you do have to bring in those experts. You have to have more expert testimony. You have to have more hearings. You have
Yeah.
to have more detailed legislation. You have to have people that understand it so they write the rules in the right way. And it's harder, right? It's not an easy, it makes it a more difficult process on Capitol Hill to be super prescriptive. So it's way easier to say, we want to do this, SEC, go do it. You
Right.
write the rule, however you think,
Yep.
you go do it. You do it on your timeline. We'll say
Yep.
it needs to be done. And obviously, some Dodd-Frank rules still aren't written. We're over a
Yep.
decade.
Yep.
But, and then you take the heat. You go over, you are too far reaching, too bad. People go to court, they're going to blame you. They're going to be mad at the SEC, mad at the EPA. But Congress did its work. We want
Yeah.
to save ponies. We
It's
passed a rule that said save ponies.
Yep.
How do you do that?
Yep.
So that is really where the tension lies. Is that so much more of the action has moved to the administrative state, has moved to the federal agencies because Congress has been unwilling to do that work.
Yeah.
And as they've been doing unwilling, they've been ceding more and more power to the executive. And
Yeah.
as they've ceded power to the executive branch and the executive agencies, they have become more active in writing these rules.
Right.
And that's kind of where the tension has lied.
Candidly, it's always felt like a little bit of political CYA for folks in the House or Senate, just pushing the hard work.
Yeah, it's exactly what it is. You're thinking it's not, it's twofold. They don't actually a lot of times want to do the detailed work of the complex
Yeah.
policy making and being
Yep.
prescriptive.
Yep.
But it's also never forget the political calculation. These are
Yeah.
politicians. So,
Yeah.
and also remember the way bills get written these days. It's not Mr. Smith Goes to Washington in the 1950s where bills go through a robust committee hearing process. They're voted on by both houses who have different versions. They
Yeah.
go to a conference committee, they argue it out. Like that happens rarely, but
Yeah.
most ways decision making happens is leadership
Yep.
decides on the bill they're going to put on the floor. They craft
Yep.
the bill in the leadership's office. They present it to the membership with usually 24 hours notice, sometimes 2,000 pages,
Yeah.
and they say vote on this.
Yep.
And
Yep.
then so it's just it and again, you're gonna see there's going to be reactions to extremes on any end. So
Yeah.
it seemed we'd gotten so far on the administrative state that the court felt they had to pull it back. And now maybe the administrative state will atrophy to such a point because Congress is unwilling to act that
Right.
the court may have to readdress it. But I mean, that's something we'll have to see.
Adam, it's funny as you say this. And for some of my older friends out there, they'll probably appreciate this. You might be too young to remember this, Adam, but I got the opportunity to show my younger wife Schoolhouse Rock. I'm just a Bill,
How a
uh,
bill comes to
and
law.
and I remember looking at it and thinking it probably doesn't function that way
No, no,
today.
no. Can you imagine the Schoolhouse Rock, how a bill becomes a law now?
Just,
It's like you go to the Speaker of the House and he writes the bill in his office and then he puts it
yeah,
on the floor 24
yeah.
hours later.
You couldn't show
And
that to kids today
and
if you
then you
did.
don't have a conference committee because the Senate passes the same version because they
Yep.
don't want to change anything because they don't
Oh,
want to vote again. It's not exactly the same system as we remember when we were kids.
exactly. If anyone's watching and you remember Schoolhouse Rock, please hit us up in the chat. I got to make sure Adam and I aren't the only ones who are talking about this. Adam, I want to get political here with you, buddy, and you and I have these conversations no matter what part of the spectrum we're on. I want to talk about that extreme perspective on the court decisions, not agreeing or disagreeing with any Supreme Court decision, but it is interesting to see how it's marketed and displayed. And what I mean by that is certainly the conservative members of the court voted in favor of, I think it was 6-3 for most of the decisions.
Yeah, most of the decisions.
Chevron, I think the very controversial immunity decision, which is deeper and more nuanced than certainly either of us has the time or expertise to review. But it is interesting because this is the same Supreme Court who was seated CFPB not too long ago. So is this idea of, and I'm getting off topic here, I'm ripping up the script out, but you and I have these kind of political conversations. It seems very easy for politicians to say, oh, this is an extreme court until they approve something they like, and then they don't really say, hey, the court made a good decision. How do you look at these Supreme Court decisions through your lens?
I think the biggest departure from this court, and you can think it radical, you can put whatever term you want on it, is at least in my lifetime, and I'm relatively young. Um, a court, at least the court, has not exactly operated in this way that just because one side's in the majority,
Yeah.
they're willing to take cases just to overturn things because they're in the majority.
Right.
In the past, it would usually be, is there a case or controversy? Do circuits
Mm,
split? Is there a reason the case is coming back to the court that they have to re-examine it? Are there new facts at issue?
right.
Is there something changing? A change from this court, and again, you could say it's conservative or liberal. I mean, obviously, we really haven't had a liberal court in a while, so it's hard to know how they would act in a similar situation.
Yep.
I would imagine now, given the political state of things, they would do the exact same thing because they would want to undo Citizens United, undo the immunity
Right.
decision, undo Dobbs, undo
Sure.
Chevron if they wanted. So you could imagine an exact, if you flip the court to 6-3 liberal, you could imagine them acting the exact same way, where you have
Yep.
liberal states that find friendly courts to bubble up these
Yep.
cases to the Supreme Court. That I think has been the most concerning development for people that have this idea of the court as this nonpartisan body,
Mm,
this ivory tower. They sit up there. They're supposed to be apolitical. We know they're appointed by presidents. You would hope that they find common ground on things like the CFPB. Okay, they're textualists. we have all different funding structures that allow this kind of outside of the typical appropriations process
Yeah.
funding. We don't like the CFPP, but we should find a way to approve that, right? Because we've done it in the past. It's the plain meaning of the text. So that's more of like the high-minded how we hope the court would work.
Mm-hmm.
I think what has been challenging for a lot of people has been kind of just the bare knuckle nature of the way this court does operate. This court does seem to have certain outcomes in mind that it wants to achieve, and it's going methodically through that wish list.
Mm.
So I think you saw that in the Dobbs decision. You saw that in the Chevron decision.
Yeah.
They're just going one by one as to, I think you saw it with Citizens United a few years ago.
Sure.
There are certain issues that they think are important that they think were wrongly decided at the time, and including, let's say, Dobbs.
Yeah.
They
Or
thought Roe
Roe
was
v. Wade for
no,
that.
that's what I'm saying. Dobbs
Yeah.
overruled Roe.
Right.
They thought Roe was wrongly decided at the time.
Right. Right. Sorry.
Everything I was taught when I went to law school is even the Supreme Court is not supposed to engage in that analysis. And I think it's one of the interesting things is when Amy Coney Barrett was doing her confirmation hearings, she had this whole rubric of how she looked at stare decisis, and she would have all these pillars as to why you wouldn't overturn precedents, and then she had these super precedents, and Roe was potentially a super precedent because it's been so much reliance, it's been decades, there were all these different factors.
Yeah.
It just seems none of those really matter anymore. And that's hard because everything we're taught as lawyers is stare decisis does matter. You do look at the past case law. You do look at how things have developed. You shouldn't just decide things because you disagree with them. You should have a good faith reason for doing so. There should be a change or development in the law and the technology. Something should have changed rather than the composition of the court. And I
But
think
is it?
that's one of the most difficult things is I think people are just seeing that the court composition has changed,
Yeah.
and then that's leading to radical changes in policies and decision making, and that is just a different way of them deciding cases than they have in the past.
But let me push back on that a little bit. And again, I feel like we're part of the McLaughlin group now, and I always
Yeah.
enjoy these conversations, Adam. But is it not a good faith analysis in their in the conservatives' contextual review that it it is in violation of the text of the Constitution? Like we make these broad
No,
statements that
I
say
wouldn't.
it's not a good
I
faith
wouldn't
assessment.
say it's bad faith. I wouldn't say that is bad faith. I would always say they believe that.
Okay.
They have a good faith basis by their textualist view or how they view textualism
Yeah.
to believe what they believe. No one is discounting that.
Right.
What I think people would say is the bad faith part is taking up the case at all, just because you disagree.
Yep.
That didn't used to be the criteria. At least is how I was taught constitutional law, and when I went to law school and when I spoke to law professors and those other,
Yeah.
that's just not the way typically we were trained as lawyers. You
Yeah.
could be a textualist, you could be a living constitution person, but you're technically supposed to leave those at the side when you come on the bench. And as Roberts used to say, I'm just there to call balls and strikes. I'm just there to call the controversy in front of me.
Yeah.
I don't think you could say that the Roberts court is held to that maxim that he stated in his confirmation hearings. And it's tough because even some of those cases where Roberts was in the minority, they were 5-4. So maybe he thought he was trying to uphold those balls and strikes by joining the liberals, but then even then, the court has overruled him, and it does create this difficult posture. I don't know if you've seen around the immunity decision. I don't want to comment on the immunity decision, but
Yeah.
there people have compiled clips where almost every one of these justices has said at some point during their confirmation hearing that the president is not above the law.
Yeah.
Well, how
But
do you?
the other side of that is the argument that the decision of the 6-3 majority is not saying that the president is above the law. And they're very complicated. I'm not a lawyer, but there are very complicated conversations around within the confines of their office or the penumbra of the
No. Well, I think that's on the outer perimeter stuff.
the outer perimeter, correct.
So I think the problem
Official
is
capacity, though.
yeah, well, but that's not, let's say, what Roberts, Alito, and Barrett said
Fair.
under oath. They said the
Yeah,
president
fair.
was under law, and then the president is subject to the laws of the United States. That's actually not what the decision said yesterday.
Yeah.
The decision said, as you said, if it's within their official powers as president,
Yeah.
they are above the law. They have absolute immunity. There is no the presumption comes on the second part. So obviously personal stuff out, official acts complete immunity, and then there is a presumption that anything else on the outer perimeter is immune, and you can overcome that presumption.
Yeah.
But I'm saying this is some of the problems that people have because
Sure.
that wasn't the nuanced answer they gave when they said the
Fair.
president's subject to the laws.
Fair. And I think isn't the core challenge that nowhere in the Constitution, for example, is official duties specific at a specific level enumerated.
No,
There's
and Roberts doesn't enumerate it in his
right.
decision. He explains how difficult he thinks it is to enumerate it, and he
Yeah.
says it's a case by case decision. And he always wants to give deference to the executive because his concern and the concern of the majority is a
Yeah.
constrained executive.
Yeah.
The concern for many people who are criticizing the decision is they're concerned about a corrupt president acting as if we've never had a corrupt president. I mean, I think
Yeah.
one of the things that's most interesting is like you had John Dean on, and he's like, if this decision was in place during Nixon, Nixon likely gets away with everything
Yeah.
because he was calling up his attorney general, he was calling up the CIA
Yep.
director, and you
Yep.
couldn't even some of the evidence against him could not have been used in the Watergate prosecution under their new standard
Yeah.
because if it's involved in official acts, you can't use it. It's not even permissible.
I
And
want
you're
to
not
tell
allowed
the
to look at motive.
I,
So this is where it gets tricky, right? It's hard. Is like
there
if your aim is to have a robust executive that's not unencumbered by the threats of lawsuits when they leave office, you want him to do the best job. You want him to do. This may be a conclusion you get to, but if you come at it from the concern of having a corrupt president, which we've had numerous periods, I mean,
throughout our history.
no, I mean some of the people think are great presidents. I mean, I don't know how many people are saying like Grant was a great president, but like Grant ran one of the most corrupt administrations
Yeah.
of all time. There was
Yeah.
rampant bribery and corruption.
Oh yeah.
That's not a new thing. There have been rampant bribery and
Oh yeah.
corruption going back centuries, and it's just again when whenever the court seems like it's looking for an outcome and then it writes the rules to get there,
Yeah.
that's what makes people, I guess, queasy about it.
Adam, I appreciate it so much. You and I have these conversations. We'll probably have more of them in kind of quiet happy hours with the group. For the audience, I promised myself I wouldn't bring up every single Supreme Court decision, including the immunity. And I clearly failed at that, Adam, but I really
Well,
appreciate
Ron,
it.
could I just note one decision we didn't
Go
touch
for it.
about,
Go
which
for
it
it.
directly relates to the SEC? There
Yep.
was the decision about administrative law judges at the
Yes. Was
SEC.
just going to go to that.
Yeah, so the one thing people should note on that, so the SEC had moved away from that system as this had played out through the courts and the circuit court system. They no longer robustly use those ALJs
Hmm.
for different enforcement actions as they were doing in the past has been the practice. Basically, it was seen as being two in house. It was like extrajudicial. They was an ALJ that was appointed to the SEC, and then you could go to court. But the long and short of it is that they can still use that. They have moved away from it as a tactic,
Yep.
but they can use it for enforcement actions solely. They cannot link
Right.
any monetary penalty to it. So if they want to do a fine, if they want to charge people, if they want to have a settlement and anything, that must go to federal court and you must
Yeah.
have a right to a jury trial if you want it. That's basically what the court said is that
Yeah.
anytime you're dealing with money or fines, not dealing with licenses, not dealing with suspensions, not dealing with enforcement activities or anything like that, you cannot use this process of having ALJs.
Right. And for the proponents of the Supreme Court decision on administrative law judges, there is a truth to the concept that look, in every instance, the agency cannot be the prosecutor, the judge, and the jury.
That was the thinking, which
Yeah.
and again, that's one of the reasons they basically cut it. They kind of split the baby the way they did. Is
Sure.
that principle must be in place if we're talking about money. But when
Yeah.
you're talking about an agency that is responsible for licensing and is responsible for bad actors and things like that, we can allow that process to work through it. Because again, even the ALJ process, if you lose at the ALJ process, you can still go to federal court.
Sure.
Obviously, any assertions you've made in that process can be used against you, but
Right.
you can still, there was still a recourse there. And I think that was the reason they kept that avenue just for those administrative actions of the agency, let's say related to a license suspension or
Yep.
something like that. They allowed that to stay in house.
And one of the interesting data points I had seen regarding that case, I forgot who had raised, is that something along the lines of sub 60% of non administrative law court cases were won by the plaintiff, sorry, by the defendant. But when it went to, for example, the SEC internal court, the SEC won 90% of the time. There does seem to be a little bit of statistical anomaly to that data. Am I overreading that as well?
I don't think you're overreading it, but I think you also have to look at like the cases they would go to
Sure.
what versus the other. So usually typically when you're in these smaller processes, including the person that challenged the rules,
Yeah.
you're typically dealing with smaller actors, a lot of times individual fraudsters.
Yeah.
You're not typically dealing with some of the larger entities. And typically the people using the ALJ process are doing it to save money. They don't have a huge amount of
Sure.
law firms. They can't do. I mean, as you know, federal court can take years
Yeah.
upon years upon years. These ALJ processes move a little faster. They don't cost as much money. There's
Yep.
not as much back and forth. There's not as much filings in federal court that you need to do, which again costs money. So you typically see some of the bigger, more interested actors go the court route. And that's one of the reasons they have a higher success rate. They have better lawyers, they put more money, they put more effort at it. Most of the smaller actors usually get overwhelmed by the agency.
Yeah.
And that's also one of the reasons the court felt for these smaller actors that did, because they thought that basically the power dynamic in those proceedings was too much in the agency's favor, and you were too much hurting the little guy's chances of putting forward their defense. And again, if you were then going to charge a monetary penalty against them, which really is seen as somewhat taking away their liberty in other ways, you
Hmm.
need to have a more robust process and go to court.
The last point on that, Adam, and you alluded to this as well. The SEC already is kind of scaling back on ALJ usage. Um, so the fear that this will just lead to a flood of new federal cases because all of these agencies can no longer process these cases—that's a little bit of hyperbole, correct?
I would think so. I mean, I
Okay.
think you've already seen it, and I
Yeah.
think basically what it is the SEC just has to be more strategic about how they manage
Yeah.
their docket. At the end
Yeah.
of the day, they have a robust enforcement staff. It's one of the largest
Sure.
law firms in the country outside of the Justice Department,
Yeah.
but they only have a certain amount of lawyers. They only have a
Yeah.
certain amount of bandwidth. They only have a certain amount of cases they can file and a certain amount
Sure.
of enforcement actions they could take. And now, because they don't have this more streamlined process, which is a little bit lighter of a touch, they just have to be more strategic in who they charge and what if really the end goal is just to suspend somebody, then maybe you put that in the ALJ process. If the real goal is to get a significant monetary penalty, then okay, well, we got to figure out how to go to court for that.
Right. Understood. Adam, let's pivot a little bit, from away from the courts and the agencies. Let's talk about the Congress. I'm still diving through Fit 21 and where the political motions of this might go. I think it was yesterday, Senator J.D. Vance put forward a draft digital asset bill. I'll be honest with you, I haven't read it yet. But the overarching for all of this, Adam, is we're in crazy election season. Everyone's having complicated conversations about the presidential debate last week. In your opinion, what are the chances of any of this moving forward between now and the end of the year?
Very, very low.
Okay. Okay.
I mean, I think you will see a ton of announcements because the
Yeah.
crypto community has a lot of money
Yep.
and they're willing to spend it in this cycle, and they're trying to elect more like-minded lawmakers, and obviously putting legislation or a marker out there showing you're a friend of the community or putting in some priorities that different communities that different interests have lobbied for is definitely a great way to stir up campaign donations, get good
Sure.
press, things like that. But it's very unlikely you do any significant bipartisan legislation, and
Yeah.
see that's the big thing is you need bipartisan legislation here. So you
Right.
need it to pass the Republican House. You need it to get over a 60 vote filibuster in the Senate, and then you need it not to be vetoed by the president.
Yeah.
That is a high bar
Yeah.
for any new regulatory structure. And one of the things that Fit 21 ran into, which tried to sidestep the issue, and which Lamis Gillibrand, which is going to be the Senate version of Fit 21, if they can get there, the problem we've always had, and we still haven't solved it, is this weird jurisdictional quirk
Yeah.
inside the Senate, which
Yep.
that the CFTC was traditionally created to regulate commodities and is
Yep.
regulated by the Agriculture Committee because that's the way it started as farming. And then the SEC is regulated by the Banking Committee in the Senate. And that jurisdictional tug of war as to who is going to be the primary regulator
Yeah.
has been kind of the Gordian's knot that people have not been able to figure out, because whoever is the chairman of the Agriculture Committee does not want to give up jurisdiction over crypto and digital assets from the CFTC because they want that in their portfolio. They want the funding. And one of the things is for most of these proposals, they empower the CFTC and they grow its
Hmm.
budget significantly because it's never regulated a spot market before. So if you give it this new power to regulate a spot market, it's going to need additional enforcement staff. It doesn't have
Sure.
a huge enforcement staff like the SEC does. It does most of its enforcement actions through the National Futures Association, which is the self-regulatory
Mm-hmm.
organization for swap dealers and FCMs. The problem is, till we figure out how to get through that,
Yeah.
as to who is the regular going to be and which committee is it going to report to,
Yeah.
that's going to make it exceedingly difficult to get the kind of bipartisan legislation you would need out of the U.S. Senate, which is really the hardest part. You can get a majority in the House, and there
Yeah.
is a bipartisan majority to pass something. And I imagine if the Senate were to come to a 60 vote agreement on a crypto policy bill that set out the regulatory framework, it could get through the House.
Yeah.
Still trying to get it through the Senate has proved exceedingly difficult and continues. And I think one thing just to note about Fifth 21,
Yeah.
Fifth 21 sidestepped this because it gave it to the Commerce Department. So it
Right.
moved it outside of
Right.
those two committees and gave it to the Commerce Committee. Is like,
Yeah.
we're not going to deal with this. We're going to say it's more financial innovation. It's like the Chips and Science Act.
Yep.
Let Gina Raimondo figure it out and promote innovation, and we'll not worry about the enforcement or the regulations.
To that point, when we look at the Senate and the House, the Senate, in my mind, strikes me as having certainly much more powerful opponents of anything crypto. I'm thinking Senator Warren. I'm thinking Senator Brown. Um, is that accurate? And let's weave something else in there. Senator Brown might be at risk, and that might change the dynamics of the conversation in the Senate. What are you seeing there?
Well, that's definitely true. I mean, I think if you list the most vulnerable senators running for re-election, him or and John Tester are right at the top of the list. And
Yeah.
simple reason for that, they're both running in states that Donald Trump won, I think, by almost 10 points, both of them.
Yeah.
And I would say this before 2022, there had been a significant decline in ticket splitting prior to 2022.
Yeah.
We did see a ton of ticket splitting in 2022. So not to say that Sherrod Brown couldn't win on the same ballot where Donald Trump wins by 8 points. Certainly could happen in
Yeah.
Ohio. But yes, I mean, he's definitely vulnerable, and obviously having a head of the banking committee that is skeptical to crypto and digital assets would be harmful for. And again, I don't know if this is anything would happen, but if, let's say, the Senate did flip, you would see Tim Scott or someone maybe like a JD Vance running the
Yep.
banking committee, and you could have a much more powerful advocate to try and get over some of that split in the jurisdictional nature. So, but I think you are right that some of the more outspoken vocal critics of crypto are in the Senate.
Yeah.
There are a couple in the House. There's like
Sure.
there's a few others, especially the ones from California.
Yep.
There are a couple of them, but I think in the Senate there are definitely more vocal opponents, and obviously Senator Warren is kind of the chief one of those.
Head of the anti-crypto army. Adam, my friend, we're just about out of time. I'm going to ask you to leave off with one prediction. I saw the news today. It looks like the SEC asked for further details on the spot ETH ETF applications. And the original thought was, they'll come out by 4th of July. I've argued that probably not coming out until later in the summer. What's your prediction?
I would say later in the summer is probably fair, but I think you could potentially see it by the end of this month. I mean, it seems, at least from the reporting I've seen, these might be the last of the kind of revisions to these
Yeah.
applications,
Yeah.
because there's always a significant back and forth with these before they're ready to go. But from everything I've heard, and I don't know if you've heard differently, the SEC seems to be engaging in good faith with these applications,
Yep.
unlike they may have potentially done in the past. And I think we saw a similar thing with the Bitcoin ETPs
Yeah.
as they were coming down the road. Once you got to the end of the process, all of the lawyers working on these are like, oh, the SEC staff is engaging with us much more than they have. They're asking thoughtful questions. We couldn't
Yeah.
even get a call back previously. I think you're seeing some of the same things. So
Yeah.
likely what they're trying to do is work through some of these last quirks, get a unified template they could use to approve all of them at the same time, like they did last time, once they settle on that. So maybe potentially by the end of July. Gensler did say he expected by the end of the summer, so he's not
Mm-hmm.
expecting any significant delay here. It's just
Yeah.
the lawyers and the bureaucrats of the SEC doing their work with the back and forth. And it
Sure.
kind of goes back to our original discussion, right? A lot of it's around the disclosure language. What are you
That's right.
disclosing in the S1s for the people that are going to buy it? So this is how the process is technically supposed to work, right? You have a back
Yep.
and forth with the regulator. They ask questions, you provide answers, you come to an agreement, and then you release it.
I've heard likewise from colleagues in industry that it's a good faith, open dialogue to move some of these things forward. Adam, it's always a great conversation. You and I can go on for a couple of hours. Really appreciate your time. For everyone in the audience who joined us, thank you again. If you've got additional questions for Adam or myself, info@wsba.co. Adam, you and I will be catching up. Let's leave it there. And for everyone watching, have a great 4th of July holiday, and we will see you next time.
Have a good holiday, everyone.
Bye-bye.